Well, what if I told you that you can start investing and building wealth in the stock market with as low as £10 or probably $10 in the US? And so stick with me in this video and I'll teach you exactly how to start and then build wealth and take advantage of the compound interest effect and then subsequently steer yourself towards the attainment of your financial goals. There are two general misconceptions that people hold when it comes to building wealth or investing altogether. Now, the first one is that it's only the rich that can invest in stocks or own portions of companies on the stock market, and that is never true. Secondly, they go on to believe that, in order for you to build enormous amount of wealth through stock market investing, you need huge sums of money. That is also not true. You can start with as low as £10, and that is the purpose of this video, to give you the fair understanding with practical examples as to how you can go about to set up an account and then subsequently invest in the stock market and build wealth. But before we set out on our investment journey, there are key terms in the stock market that we need to understand. And the first thing that we need to consider is the definition of stocks or shares. So what are stocks and what are shares? So a share is simply a minute portion of a company. So anytime that you own a share or you buy a share, you're just owning a portion of a company. And this brings us to the question, why are they in existence? So companies have two options when it comes to financing their goals for the year. So for example, if Apple has the goal of building the iPhone 16 this year and then selling it in September like they always do, then they would go out to people to find money to fund the production of these iPhone 16. So what that simply means is that they have two options. One is called equity financing, which is by flotation of shares on the stock market or selling shares to average people to raise money to fund their operations. Secondly, they can go to the banks, and that is what is called debt financing. But usually that is much more costlier because the banks also come in with interest rates. So the cheapest way that they can raise funds to fund their activities or to fund their production is through the stock market. And so they float shares. They sell a portion of the company to the public in order to raise money to build products or to enhance their services. And that is the main reason why shares are in existence. And the place where companies trade these shares is called the stock market. So that is simply where you buy or sell stocks. So this brings us to the next question, which is, why do companies' share prices or their stocks generally rise and fall? They fall sometimes as a result of factors that are within the control of the company. So anytime that the company is performing very well, that is making more sales and bringing in much more money, their share prices do go up. And anytime that they are not making so much money or they are not performing so well, then their stock prices would come down. Sometimes there are external factors within the economy also, like the current Trump tariff war that is ongoing between the US, China, the European Union, and other parts of the world. Those also have several negative impacts on the performance of a stock. So because of those tariffs, several stocks have been negatively impacted and their share prices have tanked so much. Of course, the S&P 500 has lost trillions of dollars as a result of that. And this brings us to the question that we've all been waiting for. Can I build wealth through the stock market? Well, the answer is a very big yes. So this is how you can build wealth on the stock market, or you can make money on the stock market. You can make money on the stock market generally through two ways. That is, one, dividend payment, and secondly, capital appreciation. So let's take the first one, which is dividend payment. So anytime that you buy a share or you own the part of a company, at the end of the year, or sometimes every 6 months, sometimes every 3 months, they issue what is called dividends. And that is more like an interest that you accrue by owning a portion of the company. So they pay you for the investment that you made into the company. So a dividend is simply a series of payments that are made to people who own shares, otherwise known as shareholders. So shareholders are people who hold shares or own shares in companies. So once you buy the shares and you own them, you're entitled to a dividend. So that is one way that you can build wealth, that every single 3 months or probably 6 or 1 year, they pay you some amount of money for investing in the company. Secondly, you can also make money through capital appreciation. That is, the shares that you purchased initially going up in value. So for example, if you bought a share for £2 and then the share actually goes to £5, that is a capital appreciation of £3. So you've made £3 just by reason of the share price moving from £2 to £5. So that is the second way that you can make money on the stock market. So these are generally the two ways that you can make money, and that is how people become multi-millionaires and billionaires by investing in the stock market. Now, this brings us to the next question, which is, which stocks do I have to buy or own on the stock market in order for me to make money? Now, there are two general ways that people tend to invest in the stock market. That is, one, they do individual stock picking. So they choose companies on their own that they believe are likely to perform over time. So for example, if I sit here and I look at the historical performance of Apple, I can say, well, Apple's stock price has gone up by X amount of money or X percentage over the last 10 years. And so it is likely to go up. And so I'm buying into Apple. Or maybe Microsoft, for example, has performed over the years. And so I'm picking Microsoft stock. Or I'm choosing Tesla because it's been able to grow over time and it's likely to perform in the future. That is stock picking on the individual level. But that is not what you want to do. This is Warren Buffett's advice for first timers when investing in the stock market.
Yeah, I would say that in terms of the index fund, I would just take a very broad index. I would take the S&P 500 as long as I wasn't putting all my money in at one time. If I were going to put money into a index fund in relatively equal amounts over a 20 or 30-year period, I would pick a fund, and I know Vanguard has very low costs. I'm sure there are a whole bunch of others that do. I just haven't looked at the field, but I would be very careful about the costs involved because all they're doing for you is buying that index. I think that the people who buy those index funds on average will get better results than the people that buy funds that have higher costs.
Now, after considering all these things and with the understanding that we have as it stands now, we're going straight to do the needful, and that is how can we own these stocks. And if you're convinced that stock picking or investing into an index fund is what you want to do, then you can go on to do that. So how then do we actually go on to do this? In order for you to put money into the stock market, you need what is called a brokerage account. And a brokerage account is an account that you can put money into in order for you to invest in the stock market. And there are several platforms out there that you can actually put money into and then subsequently invest in the stock market. However, for illustrative purposes, and mind you, Trading 212 is not sponsoring this video. And so I'm just using them as an example simply because they have very lower fees. So for example, they have, I think, a percentage of 0.03%. And so if you're to invest like £10,000 or $10,000 every year, you'd only pay $3 or £3 as fees. And that is enough because, mind you, what you're going to do on the stock market isn't anything other than you making money. So anything that is likely to reduce your expenses or likely to reduce your liability in the stock market is something that you have to embrace. And that is why we are choosing Trading 212 as a stockbroker for this video. Now, this brings us to the last question, which is, how do I actually put money into stocks? So after all these things have been explained and you have this current knowledge or understanding of the stock market, what you can do is to go to Google Play Store or Apple App Store and then download the Trading 212 app. That is a brokerage account that you would use to invest in the stock market. So they will take you through a series of processes. That is, first, the ID verification or your identification verification process. So what that simply means is that you may have to furnish them with your address, your emails, a couple of maybe telephone numbers or anything that is likely to link them or the account to you. And then subsequently, they would ask for a video verification. Once you've done that video verification, then they move you straight to set up an account for you where you can directly send money from your bank account to the brokerage account and then subsequently to invest in the stock market. The first index that at this point I would like you to consider is the Vanguard S&P 500. And that is the surest and the safest way for starters, just like Warren Buffett has said. Now that index have actually been averaging around about 17.6% over the last 5 years, which means that you're likely to make 17.7%, or let's say traditionally, let's be very conservative here, we can do maybe like 16% on average every single time that we put money in there. So that is enough for you as a starter because you know that your money is protected because you're investing into a pool of companies very huge, large companies. Of course, the first 500 companies, the largest companies in the US. So you know that your money is protected on that level. And then also, you don't need much to invest in there. So go on to deposit, like I promised you at the beginning of this video, just £10 or the equivalent of $10 in the US, and then invest in the Vanguard S&P 500 index. And then you can go on to, based on whatever your goals are or whatever you're investing towards, you can go on to set periodic payments or periodic investment schedules, for example, like on a weekly or a monthly or sometimes even on a yearly basis. So you can go for the weekly one because it is easier for you to send money in there and to take advantage, more importantly, of compound interest, because the more you contribute and the earlier you contribute, the more likely you are to become successful in the stock market. So choose a weekly plan or a monthly plan if you're paid monthly, and that would help you to take advantage of the power of compound interest to build wealth over time. And so that is it, you have it. You don't need much, or you don't need millions in order for you to start investing in the stock market. Start with £10, and then after some time, just set periodic payments into your stock brokerage account, and then subsequently just invest in any index of your choice or the Vanguard S&P 500. And that is the surest way for you to build wealth over time. Now, mind you, building wealth on the stock market actually takes time. So you don't want to be doing what is usually shown on social media, where people are choosing and picking stocks and all that. You're likely to lose so much money if you're to go into trade stocks as opposed to investing over the long term. Because in the long run, if you're likely to purchase stocks, every single thing would correct itself on the stock market, and even the prices of stocks over time would go up, as opposed to you just watching the stock price and, oh, it's falling, so I'm selling. That is where you lose out. Instead, what you want to do is that when stock prices are falling, like currently they are, you should be buying more. And then when they're rising, you might probably consider selling. Now, Warren Buffett says that the surest way for you to build wealth on the stock market is to be greedy when others are scared, and to be scared when others are greedy. So that is it. Just do the exact opposite of what the market is doing, and you're surely going to build wealth through the stock market. Thank you, and I hope this video was helpful. Now, if you want more tips or you want to learn more about investing, then I'll be shooting several videos, editing and posting them on this channel. So you might consider subscribing or liking this video. It really helps. Thank you.